Hello, this is Sudarshana Starshine Star. Welcome to my channel. This is going to be a clip that I'm going to title Part 3 in the series I'm doing about what Americans really need to know. And I'm going to be reading a few pages from the wonderful book called Meet Your Straw Man and Whatever You Want to Know, that's published by the www.nationallibertyalliance.org, and it is available on Amazon. I will show the cover at the end of this clip, so you can purchase that if you like. Let's start with the three opening prayers to open and bless this sharing and teaching of knowledge and information session. Om, Om, Om. Guru Brahma, Guru Vishnu, Guru Devo Maheshwara, Guru Sakshat Parabrahmam, Tasmai Sri Guruvena Namaha. Om Suklam Bharataram Vishnum, Sashivarnam Chatubhujam, Prasanavaranam Dhyaye Sarva Vigno Prashantaye. Om Bhur Bhuva Suvaha Tat Savitur Varenyam Bhargo Devasya Dhimahi Dhiyo Yo Naha Prachodayat. Om Shanti Shanti Shanti. This portion of the book is titled The Bookkeeping. The next part of the information may be a little difficult to understand. When any business is being run, the accounts are recorded as money coming in and money going out. For a bank, the money coming in is called a credit, and money going out is called a debit. The objective here is to have these two amounts always match each other, balance, for any customer. Not everything done in banking is immediately obvious to the average person, so it may be a little difficult to understand how everything works in this area. If you have an account with a bank and you deposit $200 to open the account, the bank enters that in its books as a credit. The credit on your account is $200 and the debit is $0, so the balance has a positive or credit value of $200. If you were to withdraw $300, then the bank would record this as a debit of $300. When the credit balance on your account is $200, the balance on your account would be $100 in debt, that is, overdrawn by $100. If you were to deposit a further $100 and then close your account, the bank would not have any problem, other than the fact that they would like to keep you on as a customer. As far as the accounting goes, your account is balanced and the bank is satisfied with the state of affairs. $300 has come in and $300 has gone out. The book balance, case closed. Now, if you were to apply for a loan, excuse me while I turn this page, or a mortgage, or otherwise, for $100,000 from the bank, they would give you an application form which is set out in such a way that you have to fill in the straw man's name rather than your own. Separate boxes with one of them containing quote-unquote Mr., and they may even require you to fill the form in using block capital letters. You may think that the capital letters are so they can read your writing, or perhaps to make it easier for it to be entered into a computer. But the name in those capital letters belongs to the straw man and not to you. You have actually just made an application on behalf of the straw man and not on behalf of yourself. You may wonder why they would want you to do this. After all, what could they ever get from the straw man? Well, you might be surprised. When the straw man was incorporated, they assigned a large monetary value to it, possibly $100 million. And they have been trading on the stock market on behalf of the straw man ever since. And you know how many years that has been. So very surprisingly, in their opinion, the little fellow is really very rich, and you have just authorized them to take the amount of your loan application from the straw man's account. So before the bank passes you any money, it has already gotten its money from the straw man account and entered it into its books as a $100,000 credit to your loan account. They then place $100,000 into your loan account as a debit. Interestingly, that loan account is now balanced and could easily be closed off as a completed as a completed deal. This is where the sneaky part comes in. To get the money out of your account, you have to write and sign a check for $100,000 on that account. What does the bank do with checks which you sign? It assigns them to the account as an asset of the bank. And suddenly the bank is ahead by $100,000 because the check is in the name of the straw man who can supply the bank with almost any amount of money. But it doesn't end there, as the bank is confident that you know so little about what is going on that you will pay them anything up to $100,000 over the years against what you believe you owe them. If that happens, then they have made yet another $100,000 for the bank. To make things even better for them, they want you to pay them interest on the money which you don't actually owe them. Overall, they make a great deal of money when you borrow from them, so perhaps you can see why banks make hundreds of millions in profit each year. If the loan were used to buy a property, then the bank probably insisted that you assign the title deeds to them as collateral for the loan as soon as the property deal was completed. If you then fail to keep paying them, they are likely to attempt to foreclose on the quote-unquote loan and sell your property quickly for an even greater profit. And to add insult to injury, if the property sale did not exceed the amount of the loan plus the charges for selling it, then they are likely to claim that you owe them the difference. Perhaps you can now see why Jerome Daly told them to go take a running jump at themselves, and why your request for the accounting for any loan made to you puts the bank in an impossible situation. If the bank then just writes and tells you that the quote-unquote debt is fully discharged, they have still made a massive profit on the operation. And they also hope that the vast majority of their customers will not catch on to the fact that they are paying far too much for their property, or even that there is a straw man involved. Please don't feel that you are ripping off the banks if you don't pay them what they are asking you to pay. They have already recovered everything paid out before you start paying them for the second or third time. When it is a mortgage, the entire process is very much the same. The quote-unquote debt-free sovereign website, and it's given here as http://www.freewebs.com/debt-free sovereign. And that gives a very clear description of this process in Canada, and the process is much the same everywhere else. They describe a typical property sale and mortgage this way. The buyer goes to Magic Bank in response to the bank's claim that it is in the business of lending money in accordance with its corporate chapter. The buyer went to the bank believing that the Magic Bank had the asset, money, to lend. Magic Bank never tells its customers the truth, that it does not have any money to lend, nor, excuse me while I turn this page, nor that Magic Bank is not permitted to use their depositors' money to lend to its borrowers. Notwithstanding the fact that Magic Bank does not have any money to lend, Magic Bank makes the buyer/borrower sign a mortgage loan application form, which is essentially a promissory note, saying that the buyer/borrower promises to pay Magic Bank for the money, parentheses, what money, which he is supposed to receive from Magic Bank, even before any value or consideration is received by the buyer/borrower from Magic Bank. This promissory note is a valuable consideration, a receivable, and therefore an asset transferred from the buyer to the bank, which Magic Bank enters into its own asset account as a cash deposit. After making sure that the buyer has the ability to pay the required monthly payments, the buyer has credit, Magic Bank agrees to lend the buyer the money, cash, to pay the seller. Magic Bank has no money to lend, but it gave the buyer a promise to lend money by way of a commitment letter, loan approval letter, loan authorization, or loan confirmation letter, etc., signed by a bank official or loan/mortgage officer employed by Magic Bank. Magic Bank's acceptance of the buyer's promissory note makes the bank liable to the buyer-borrower for the full face value of the promissory note, which is the agreed purchase price of the property, less any cash deposit or down payment money paid by the buyer directly to the seller. It is important to note at this point that all real estate transactions require that the property being sold must be conveyed by the seller to the buyer, free of all liens and encumbrances, which means that all liens such as existing mortgages, judgments, etc., must be paid before the property can be mortgaged by the buyer as collateral to the mortgage loan which is yet to be received by the buyer, pursuant to the promise made by Magic Bank. How can the seller pay off his mortgage and obtain clear title if he has not yet received any money from the buyer? And how can the buyer mortgage a property that does not yet belong to him? This dilemma is solved using Magic Bank's magic bag of tricks. Magic Bank, in concert with the bank's lawyers or notaries, causes all the liens and encumbrances to magically disappear by writing a Magic Bank check, backed by the buyer's promissory note, an agreement of purchase and sale, deposited into the lawyer's trust account to pay the seller for the property at closing. In essence, using the buyer's promissory note as the cash to enable the agreement of purchase and sale. So the buyer's promissory note made the conveyance possible. Magic Bank caused the property to be conveyed from the seller to the buyer with title free and clear of all encumbrances and liens. The property now belongs to the buyer, which makes it possible for the buyer to mortgage his property to Magic Bank. The buyer actually paid for the property using his own promissory note. At this point, the seller has not yet received any money or cash, as Magic Bank and its magicians must perform more magic in order to satisfy the seller's requirement that he get paid, or the whole deal is null and void. The seller does not even know that the property has been magically conveyed to the buyer's name in order for the seller to receive any money. The ensuing magic trick is accomplished this way. The buyer is made to sign another promissory note. The mortgage contract is attached to the promissory note, which makes the buyer liable to pay Magic Bank for the money or the loan which the buyer has not yet or may never receive for up to 25 years or more, depending on the term of the mortgage contract. This note is linked to the collateral through the mortgage contract, and as such, it is valuable to Magic Bank. Magic Bank then goes to the Federal Reserve Bank or to another bank to pledge the deal that they have just gotten from the buyer for credit. The Federal Reserve Bank then gives Magic Bank the credit. Remember, it is not Magic Bank's credit. It is the buyer's credit who promised to pay Magic Bank if and when the money is received by the buyer from Magic Bank, payable for up to 25 years or more. Note, what happened above is basically a swap transaction all banks do to monetize security. In this case, the second promissory note that is linked to the mortgage contract and signed, by the buyer is a mortgage-backed security. Magic Bank will then agree to pay the Federal Reserve Bank certain percentage of interest over prime. Thus, the buyer's loan package goes to the Federal Reserve Bank, which credits Magic Bank with the full amount of credit, which is the total amount of the money Magic Bank is entitled to receive after 25 years, which is the amount of the principal plus all the interest payments the buyer has promised to pay to Magic Bank for 25 years or more, which is usually 3 times the amount of the money promised by Magic Bank to the buyer. By magic, Magic Bank just enriched itself and got paid in advance without using or risking its own money. Magic Bank's magician, the lawyer who holds the check that is backed by the buyer's original promissory note, then writes a check to the seller as payment for the property. In effect, the buyer paid the seller with his own money by virtue of the fact that it was the buyer's own money, the promissory note, that made the purchase and sale possible. Magic Bank just made a cool 300% profit without using or risking any capital of its own. Neither was there any depositor's money deducted from Magic Bank's asset account in this transaction. What really happened was pure deception, and if we the people tried to do this, we would end up in prison, being found guilty of fraud and criminal conversion, not to mention that the property would have been seized by the court. This is only a crime if we, the people, do it to each other, as it would be an indictable crime if we issued a check with no funds. There would not be any deal, no purchase, and sale agreement because there is no valuable consideration. In order to decriminalize the transaction, we need Magic Bank and their cohorts to make the deal happen. It is really a conspiracy of sorts, but these persons, in quotes, the banks, the lawyers, and the land title officers, or even the courts, do not consider the transaction as fraudulent transactions because these transactions happen all the time. Such a contract is void ab initio, or void from the beginnings. Or void from the beginning, which means that the contract never took place in the first place. Moreover, the good faith and fair dealing requirement through full disclosure is non-existent, which further voids the contract. Magic Bank failed to disclose to the buyer that it will not be giving the buyer any valuable consideration and taking interest back as additional benefit to unjustly enrich the corporation. Magic Bank also failed to disclose how much profit they are going to make on the deal. Magic Bank led the buyer to believe that the money going to the seller would be coming from its own asset account. They lied because they knew, or ought to have known, that their own book or ledger would show that Magic Bank does not have any money to lend, and that their records will show that no such loan transaction ever took place. Their own book will show that there will be no debts from Magic Bank's asset account at all, and all that would show up are the 2 entries made when the buyer gave Magic Bank the first collateral, or the promissory note, which enabled Magic Bank to cut a check, which made it possible to convey the property from seller to the buyer, free and clear of all liens or encumbrances, as required by the agreement of purchase and sale entered into in writing between the buyer and the seller. What really happened was not magic in reality. The buyer's promissory note was used by Magic Bank and its magicians, the lawyers and land title clerks, to convey free title to the buyer from the seller. So why do we need the mortgage contract at all? The other entry that would show up when we audit Magic Bank's accounts is the other pledge of collateral, including the buyer's promissory note, which was converted unlawfully and without disclosure or permission from the buyer into a mortgage-backed security, which was swapped or deposited by Magic Bank to the Federal Reserve Bank, for which another deposit was entered into Magic Bank's transaction account. From the above, we can list all the criminal acts perpetrated by Magic Bank. 1. The mortgage contract was void ab initio because Magic Bank lied and never intended to lend a single cent of their own asset or depositor's money to the buyer. 2. A valid contract must have lawful or valuable consideration. The contract failed for anticipated breach. Magic Bank never planned to give the borrower any valuable consideration. 3. Magic Bank breached all its fiduciary duties to the buyer and is therefore guilty of criminal breach of trust by failing in its good faith requirement. 4. Magic Bank concealed the fact from the buyer that it would be using the lawyer's promissory notes, first to clear all the liens and encumbrances in order to convey clear title to the buyer, and then use the second promissory note to obtain more money from the Federal Reserve Bank or other institutions that buy and sell mortgage-backed security. Magic Bank received up to 3 times the amount of money required to purchase the property and kept the proceeds to itself without telling the buyer. Magic Bank violated its corporate charter by lending credit, or nothing at all, to the buyer, and then charging interest on this make-believe loan. Banks are only licensed to lend their own money, not other people's money. Magic Bank used the buyer's promissory note to clear the title, which essentially purchased the property from the seller. The transaction is an ultra vires transaction because Magic Bank has engaged in a contract outside of its lawful mandate. An ultra vires contract is void or voidable because it is non-existent in law. 6. Everyone involved in this undertaking with Magic Bank, starting with the loan or mortgage officer, the lawyers, the land title office, and even the central bank, are equally guilty by association of aiding and abetting Magic Bank in its commission of crimes against the buyer and the people who would eventually have to absorb all of the loss through increased taxes, etc. In the final analysis, Magic Bank and the others who profited from the ultra vires transaction are all guilty of unjust enrichment and fraud for deceiving the buyer and the people, and for acting in concert in this joint endeavor to deceive the buyer. Okay, that's going to be all of the reading that I'm going to do in this clip for now. The next portion that I will read and record will be starting with the title, Dealing with the Police. So, there you go. There is the book, Meet Your Straw Man and Whatever You Want to Know. You can see it there. It's on Amazon. Okay, thank you so much for staying with me through this video. I hope you liked it. If you did, please remember to like and subscribe to my channel. I would really appreciate it. Thank you. And now we're going to close this session with the closing prayer. Om, 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 Loka samasta sukhino bhavantu. Loka samasta sukhino bhavantu. Loka samasta sukhino bhavantu. Om Shanti, Shanti, Shanti. Peace, peace, peace. And God bless all of you and your beloveds. And I will see you soon. Thank you.